Is edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. I am Cesar Delgado. I am your host of today's program. We were glad you're here on today. Let's take this week on a Monday. I am excited about the Super Bowl in New Orleans for the game. Well, we were talking about the 45Z and tariffs, harvest season in northern Illinois. We were talking with Steve Pittstick from Kane County in northern Illinois nearby Chicago. Then we were talking about the fertilizer markets for right now with Josh Linville from Stonex on Back Roads of Illinois. Lastly, we were talking about the commodities markets with Tyler Shau from agmarkets.net on Back Roads of Illinois. We were staying in the fore of the market. We will have a conversation on that with Tyler. Otherwise, this is your rural news sponsored by AgriGold. This will be coming to the tariffs for Canada and Mexico, to the fertilizer from Canada and vegetables from Mexico. The tariffs is opposed for 25% from Mexico and Canada. The EPA administrator will be confirmed by the Senate Ag committees. However, there are some concerns about the biofuel for the SAF or 45Z guidance on corn ethanol. However, he will be supporting for the biofuel. Finally, in the Midwest, the weather is going to be warm up in Illinois, Iowa, Indiana, Missouri. This was having a cold winter weather conditions from last week in the Midwest. This been your rural news on Back Roads of Illinois. This is your commodity markets for this afternoon, sponsored by Kyle Bumstead. He's your commodity broker from Allendale Incorporated. Corn futures is down at 5 to 10 cents. Soybean futures is down at 3 to 5 cents. Chicago wheat is down at 5 to 9 cents. Let's take a look for the livestock markets for today. Cattle is up at 9 to 5 cents. Feeder cattle is up at 3 to 6 cents. Lean hogs is down at 3 to 5 cents. This been your commodity markets for this afternoon. We were talking about the 45Z and tariffs, harvest season in northern Illinois. We were talking with Steve Pittstick from Kane County in northern Illinois nearby Chicago. Hey, Steve, how are you today? Let's discuss about your experience in this harvest season. Could you tell us about that?
Yes, Caesar, good morning. We had a great 2024 season, record corn yields for us, the driest crop I've ever harvested. Soybeans were just kind of average, and the crop did get too dry, so we lost a little bit just with things being too dry. But overall, a great 2024 year.
How was the yield with corn?
As I said, our corn crop was a record, the best crop that I've ever combined over the most amount of acres and the earliest harvest.
Great to hear that. Steve, What is your thoughts on the 45Z from Washington, D.C.?
So the 45Z is still being developed. We don't have all the answers from DC with the change in administrations. Uh, there were some announcements last week and the week before, but really no firm guidance on where that's going to go. The climate smart dollars that could come from the IRA, Inflation Reduction Act, just not sure of the longevity and if those things will still be coming. A lot of information still unknown at this point. Just trying to get it right.
Steve, could you tell me that what is the importance of free trade, Steve?
So the importance of free trade is we raise a lot of crops, very good. We need to have trade agreements with other countries so that those goods can flow to those countries and we bring back things that they raise better than we do. Uh, Maybe it's flowers, bananas, grapes. Who knows what it might be, but we're really good at raising corn and soybeans, and our excess production needs to go to other countries.
Do you have any concerns about this ag trade deficit?
There's always a concern. I think the new administration is working on that to try to get it back in balance. A lot of things are changing. It's been a fun week watching. Even last night, some of the things with Colombia were fun to watch. We'll see as it develops over the next 30 days and go from there. All I heard was something in reference to
How
export
many
of.
of export of our corn to other countries?
Yes, our corn is a very big export program. Uh, it's kind of vital to the Mexican trade. They're one of our largest customers. I believe Colombia, that was in the news yesterday, is in the top five. Um, every country is expanding their livestock program to feed their people, and they're using a lot of American corn.
Do you have any final thoughts on the corn production from the World Supply and Demand Report with its farmer perspective?
Yeah, so every report that comes out, farmers question. This one was to our benefit. We really kind of had a suspicion that that's the way it may have gone, and it did. Most of that was because of a very dry harvest, 2, 3, 4% less than ideal moisture, so that affected total volume. So we're not surprised by the outcome of this report.
Thanks, Steve. I enjoyed our conversation for today.
Thanks for having me on, Caesar. It was great to be with you.
Thank you. We were talking about the fertilizer markets for right now with Josh Linville from Stonex on back roads of Illinois. Hey, Josh, how are you today? Let's discuss about the world fertilizer markets for right now. What is going on with this markets?
Well, the only constant in the fertilizer world seems to be volatility, and that has continued to be the case. Looking at nitrogen, that has been the one we've seen a lot of strength in that marketplace. And again, it's a lot of the factors we have been kind of talking about, kind of watching for here for the last few months. Uh, when you look at the global supply of urea, and urea being the one that really sets the tone for nitrogen in general, it's tight. And it's tight because when you look at Europe, they're still struggling with with high natural gas prices and a production rate of nitrogen fertilizer. It's about 75% of normal. That's a 3+ million ton per year production loss. We have got Chinese exports that we finally got the data for the remainder of 2024. They would normally export about 5 to 5.5 million ton per year. These are in 2024, they export about 360,000 ton, and I'm rounding up. So 5 million tons that are just missing there. And here recently, the news story that's really kind of hit the nail on the head is Iranian production has gone down. Obviously, a country that has dealt with really long-term sanctions, has dealt with the inability to get supplies and manpower and things like that that they need to keep these things flowing smoothly. Plus, it's wintertime, so demand for gas is higher from the residential standpoint. But again, Iran exports like 4.8 million ton per year, and they're just gone. So when you total all of those up on an annualized basis, that's 12+ million tons. They're just not there right now. And so that has really kept supplies very, very tight. Now we've got India that's in the middle of a 1.5 million ton purchase tender. We are not quite to the conclusion of that yet, but it looks like they are going to get a lot of tons. It's going to wipe out a lot of excess inventory, and that should keep things relatively tight on the global S&D, and our prices follow it. So nitrogen continues to be supported. Phosphate astronomically high, regardless of how you look at it. I mean, if you look at it versus grains, you look at it versus historical values, look at it versus production values, it's extremely high priced. But the market is tight. Again, we go back to China. They are typically the world's biggest exporter, 10+ million ton per year. They finished out here in 2024. In fact, let me look this up real quick. Their exports finished at just over about 6.6 million tons. So it's a big chunk of tons. But when you look at it in relation to normal, that's behind. And when you look at the world's biggest buyer, who's India, they usually start the new year at about 2 million ton stockpile, about 1.2 this year. So they've got a lot more buying to go on. So the global phosphate market can. I do for potash. When you look at nitrogen, there is a flow that goes back and forth between the two countries, urea specifically. On the eastern half of the continent, a lot of urea shifts north. In the western half, a lot of urea shifts south. So that seems like it's going to be a little bit of a toss up as far as how that will work out on, whether we put it on them, if they put one on us as a result, as retaliation. Both sides will lose. Phosphate, that is merely a U.S. to Canadian shipment, so we don't expect a whole lot there from a U.S. perspective. It's the potash one. That is the one because we are just so reliant. And a lot of people are like, well, we'll just ramp up our production here. The U.S. doesn't have enough production to fill U.S. demand. We need those imports. We are relying on those imports. That's going to be the one that has an effect. And again, like I said, it's a little bit of a class study. It's a little bit theoretical. We just don't quite know how it's going to work out. But usually speaking, when it is commodity markets like this, it's typically the country that imposes the tariff that ends up paying a little bit more of the price.
What part of the world for urea?
Say that again. I'm sorry.
What part of the world for urea?
Do you mean in terms of on the tariffs or for just what's driving it today?
What part of the world for urea?
I would say right now, for what I'm watching on urea, I'm not, like I said, I'm not terribly worried about the tariffs. The things I'm watching for is Chinese exports. Are they going to return? Domestic stockpiles are very high, and that has caused domestic values to go low. And unfortunately, that's exactly what the Chinese government has wanted. But with stockpiles getting so high, will that force them to allow exports? And that would start to give a little bit more of a bearish tint. We expect Iranian production to come back online. That is going to be another 10% coming back onto the marketplace. So Europe isn't one we don't expect anything to change there. But I would say today our biggest two watch points is China and Iran. And frankly speaking, our prices will ebb and flow with the world.
I want to go to follow up with this question. What happened with that if the tariffs as opposed to the fertilizer from Canada? I want to follow up with this.
Yeah, and it's unfortunately it's something we'll have to talk about in a few weeks, and we'll have to see how things play out if they actually happen. Right now, like I said, I've spent way too much time thinking through this, and I talk myself in circles on what could happen, what couldn't happen. It's very difficult to kind of formulate what the end story will be.
How about P and K? Josh, do you have any concerns about that?
I wouldn't say I have concerns about supply, and the shortage story is one that's been told so many times. It's wore itself out. There is no such thing as a short supply. There is a price change because of tight supplies. You'll always find what you want if you're willing to pay the price and work with the time frame of it. But when it comes down to it, phosphate is snug. There's a conversation to be had that, hey, corn acres are rising. We had started 2025 with our corn acres around 92. We moved it up to 92 and a half. Recently started moving to mid 93. Some people saying 95, 96 is in the ballpark. That's a tremendous amount of extra demand that's being placed right on top of an already tight supply marketplace. So I think things will be snug, and I think that's what's going to continue to support phosphate prices as we lead into the spring season. But as far as sitting there saying, "Oh, you won't be able to find it," if you're willing to wait a little bit and pay the price, you'll find it. That's just a free market. Potash, again, yeah, things could get a little snug just from a logistical standpoint, but from an overall supply side, it feels more sufficient, presuming we don't have tariffs shutting down supplies or anything like that.
Why does it take demand is tight for right now?
It's the fact that we're seeing demand rise just before the spring season. And this has been something. It's not that farmers are sitting there saying, oh, corn is so profitable. It's more that corn is the best of the worst, if you will. But when you start to think about moving your demand from 92 million acres to a possible 95, 96, I'm not sure I'm quite in line with that yet, but let's just say it's that possibility. That's 3, 4 million acres that needs phosphate, that needs nitrogen. And with so little time between now and the start of spring season, which frankly, we're sitting here recording this on January 27th. There's some areas in the Midwest that could easily start going March 1. That's 30 plus days away, 30, 35 days away. And so you start to think about this on the global logistical scale. That's nothing. That's buying something today shows up March 1. And frankly, that's just showing up to the U.S. shore. Well, now you got to move that product from the shore inland where the farmer can find it. Now, all of a sudden, you're not talking March 1. Now, all of a sudden, you're talking April 1. Well, what are we thinking about in April 1? Well, now we're thinking about planting. Phosphate, potash, that's in the rearview mirror. We're onward, upward. We're planting the seed. So that's the issue that we're kind of dealing with there today.
Yeah, we were almost here.
Yep.
Do you have any final thoughts on the corn estimate from last couple weeks ago by the USDA?
I don't. I'm primarily a fertilizer guy. So a lot of my corn conversation basically I get from overhearing like Mike Castle and Arlen Suderman and other people that are much smarter than I am. But when you sit there and you talk with them, there's a tremendous amount of demand. Or the soybean supply seems more insufficient. That's why we see it so discounted versus grain. That's why we're seeing such a push for the corn acres. And so that's the thing. I'm looking at it as they come up with, formulate kind of their opinion, their point of view. And then we take that, we plug it into the fertilizer model and say, okay, this is what that means for our marketplace.
I admire your work.
I appreciate it. I wish I had more good news for the market from time to time. It seems like I spend a lot of time giving bad news, higher price news. But you're sitting there saying, "Hey, prices are coming down." Hopefully today's coming sooner than later, but it's unfortunately I've got to the point people seem to enjoy it when you give the real truth rather than sugarcoating it. So we'll keep at it, keep trying to get the information out there.
True. Thanks, Josh. I enjoyed our conversation for today.
Absolutely. And hey, let's talk in a few weeks. Maybe we'll have a little bit better idea on this Canadian tariff.
This is Josh Linville from Stonex on Back Roads of Illinois. We were talking about the commodities markets with Tyler Shau from agmarkets.net on Back Roads of Illinois. We were staying in the fore of the market. We will have a conversation on that with Tyler. Hey, Tyler, how are you today? Let's discuss about the grains markets for right now. What happened with the corn and beans, wheat?
Hey, I'm doing good, Caesar. It's always good to get to visit with you. Grains today kind of took it on the chin. Came out of the weekend down 4.5 in March corn. That's the first time we've seen 2 consecutive trading days in corn with a down day. So if you recall, last Friday we closed down 3.25. We closed down today 4.5. It's the first time we've seen 2 consecutive down days in corn since December 18th. So a little over a month since we've seen that type of negativity in the corn market. Nothing to get too concerned about that, that I'm just chomping at the bit. We did close slightly below the 10-day moving average, which I think is something kind of important to pay attention to. That had been pretty good support really since that time frame right there in mid to late December. Beans had another kind of a tough day, down 10.75 in March beans. Beans have had a few stretches of multiple days where they go down in that time frame, unlike corn. And then wheat, just right when you kind of get friendly to wheat, last week felt like we were finally going to get something done and continue pushing higher. Made some new highs, recent highs anyhow, higher highs than we'd seen, and just kind of got throttled Thursday, Friday, and today closed down another 8.5 cents. So not a good look on wheat. A lot of the negativity is stemming from Argentina over the weekend. Said that they were going to cut their export tax. That's an effort to try to get Argentine farmers to cut loose of some of their production and just making their product some of the cheapest in the world. They were already the cheapest wheat in the world ahead of that export tax cut, and now they've, obviously will get even cheaper as a result. So kind of a down day in grains, but I guess to be expected with the run we've seen in corn, especially over the last couple months.
How is the March corn on yesterday's situation? Tyler.
March corn. Well, March corn is down 4.5 today. It's, on a technical standpoint, it's nothing to get too concerned about, but, it did close below the 10-day moving average. It's done that a few times here over the last, I would say month and a half, where it's slightly below the 10-day, and the very next day we rally back. So it'll be interesting to see how we trade tomorrow. A lot of stuff going on though. There's a lot of macro type stuff. You get the NASDAQ, the S&P 500 down big. Energy's down crude oil's down $1.50. So some outside markets going to weigh on stuff.
Of course, Tyler. Why is this prices so high?
Why are they so high is, just a simple lack of supply. We've over the last few years, we've sold off a lot of cows that had to be, it was done because of drought liquidation. We saw a fairly sizable drought in Texas in 2020. We saw a major drought in the northern plains in 2021. Saw continuation of the drought in the southern plains in 2022. So you had 3 major drought years where a lot of cows were sold off. You've got a lot of guys that have just gotten old. The average age of the rancher is not getting younger, and there's not a lot of people out there wanting to run cows and calf out cows for a living. So it's just tough to find. Throw in the fact that over the last month and a half, we've cut off imports from Mexico, feeder cattle imports. It's just made a number of available cattle even smaller. And through all of that, demand for beef has remained robust. So, prices are always about supply and demand, and we've choked off some supply. We haven't, it's tough to rebuild that cow number back significantly. It takes time to get the number of head back up there, and so far it just feels like there hasn't been a lot of interest in building the herd back. So guys are just going to continue to make money on at least the guys that own the cows are going to continue to do well as long as prices stay supported.
Okay, Tyler. Do you have any final thoughts on the tariffs for this week?
Bear in mind, I wasn't a commodity broker the last time Trump was the president. I was teaching commodity marketing, so I didn't deal with a lot of the intraday and daily day gyrations of the market off of a tweet that President Trump posted or a tariff spat that he got into. But what we're seeing right now is sort of reminiscent of the previous Trump era in that he would say something, tweet something. There would be some type of comment made by a foreign leader in retaliation. Usually it's the third or fourth item that pops out of the conversation that's really important. And we live in a world today where markets, the edge is really important. You want to be the first one to get the information. You want to be the first one to trade the information. And a lot of times computers are the ones executing those trades. So you're going to see a lot of kind of what we saw today where, in the overnight, we heard that Colombia was going to respond to some threats of tariffs by Trump by putting 50% tariffs on all imported products out of the U.S. We export a lot of corn to Colombia. I think they're like the third leading importer of U.S. corn, to be right honest with you. So, that had some repercussions. Corn market traded down lower. Same with wheat and beans. As the night went on and the morning, some of those grandstanding by both Trump and the Colombian leadership, they kind of backed off a little bit. And the market was like, oh, maybe it wasn't quite such a big deal. So I would foresee a lot more of that. And anyone who thinks they're smart enough to know what the next move is, I'd be pretty nervous about trading on that advice.
Thanks, Tyler. Good luck with your meeting in Nashville for next week.
You bet. Thanks, Caesar. We'll talk to you later.
This is Tyler Shau from agmarkets.net on back roads of Illinois. Thanks to Steve Pittstick and Josh Linville, Tyler Shau. This has been Back Roads of Illinois. I am Cesar Delgado. You have a great day.